Hi, this is Yahoo. I'm micro option trader. Today is August 20, 2025, 7:33 a.m. Japan time. Let's go over the markets. First, Japan market. Yesterday, the Nikkei closed at 43546, and in the night session, it slipped into the 43300 range, so it looks like we are seeing some profit-taking pressure. And the number of advancing stocks was again over 2,000, which shows the individual stock picking remains strong. The bracket index is at 24.22, holding steady in the middle 20s. APS came in at 2432 yen, giving us a PR of 17.9 times. No big change there. Overall, stocks were being bought individually, but the index itself was not pushed up. And the 44000 yen level seems like an upper bar, which corresponds to about 18 times PER. So index moves are starting to calm down. The market looks like it will stay in range, while individual stocks selection merely take over, especially growth stocks. And as I've been saying, it feels like money is finally flowing back into growth again. Second, Japan's bond politics. The 30-year JGB yield climbed to 3.13%, moving up another notch. This came after reports that the Democratic Party for the People, Kokumin may submit consumption tax cut where if they can get opposition parties to agree. That sparked concern over fiscal discipline, which pushed it higher. On the surface, the tax cut means more money stays with the household, so yes, that's bullish for equities. But on the other hand, the driving unemployment is rising, and if that offsets things, we don't know if overall money supply will really increase. For now, the market is just reacting to the physical expansion narrative, so in my view, Japan shifting more and more toward the stock picking market, with the Nikkei around 44000 yen as a partial point. EPS has been pressured by Trump tariff recently, but if it recovers, the index could resume upward trend. That's not something I'll be monitoring closely. Third, U.S. market. Looking at the U.S. and the S&P closed at 6411 points, down 0.58%. Even so, it's still holding at a higher level, and the VIX was worth 5.55. So no big fear factor. Clearly, it's still stock market turn in the US as well. Fourth, gold and Bitcoin. Gold settled at $3315, down about 0.5%. Recently, it had been around the $3330, so it's starting to edge lower. Bitcoin fell harder, down 2.6%, now at $113,000. So once again, we see it clearly. Money is flowing out of the gold and Bitcoin and into equities. This really looks like a stock market cycle, nothing else. 5. Market risk and geopolitics. As for risk, the war in Ukraine is moving toward an end, maybe even a settlement, which is a very welcome development. That could also mean cost-push inflation starts to ease, opening the door for central bank to cut rates. With the U.S. already passing tax cuts, Japan likely to follow. On the surface, it's all very positive for equities. But remember, these tax cuts may nearly be a way to cover unemployment caused by AI growth. So it's not purely stimulative. We will all need to watch how the price out. shakes, climate risk, and rain risk. One more risk factor: climate. Japan is again in a period of extreme heat. We had a short rainy spell where temperature cold, but now we are back up to 38, 39 the C, even in Tokyo this week. According to the Japan Meteorological Agency, high temperature could last through September, October, and even November. That implies low rainfall, and that's big risk. Reservoir levels had dropped sharply, then temporarily recovered with the recent rains. But if you look at the data, total rainfall this year is the lowest about 20 years. So even if reservoir looks okay for now, the supply of fresh water is structurally low. At some point, this shortage will surface, just like money supply imbalance eventually do. In the past, we could count on the typhoon or last summer rains, but if these autumn rains don't come, like what happened in last winter's dry spell, then the next 6 months could be denied by confirmed water shortage. If that happens, household water use will be prioritized while industrial use gets cut back. And no matter how strong the economy is, some industrial activity would have to stop. So this rain risk, rainfall supply shock, remains a key risk to monitor. Rainfall, after all, has always been a critical indicator for Japan and for global world. That's why we call it breast rain. So alongside market trends, it's something to keep in mind. Climate risk is real, and it needs our focus. Closing, so yes, the market is strong for now, but these risks, physical and AI-driven unemployment and climate, are things we need to keep watching. That's all for today. Please check out my content. If you look like more, I'll see you tomorrow again. Long put strategy. Goodbye.